What's going on, squad? E Hobbs, aka Art of War, Thursday, March 21st, 5:05 p.m. Eastern Standard Time. And solid day today. Gave a little back only to get some more, but really, really proud of the fact of how I traded effectively but efficiently because of late. I've been giving back profit, making, easily, $500, $700 in the morning and giving it back either midday or in the afternoon off of trades that weren't simply, excuse me, idea. And so I really want to just dive into two trades specifically, GOEV and then SOUN. I played them both long and short, and it's merely just following the patterns that I continually talk about each and every time: multi-day runners, volume, support and resistance with volatility, right? And so each one of them is entirely different, but nevertheless, they're following the patterns. And as I speak, from a live trade that I did long, where I initially lost out on it, ended up buying it at 622, and now this is trading in the 660s as I predicted. So good to know that it's playing out, and then I'm really reading the stock very well. But nevertheless, I want to start off with GOEV. And so GOEV is typically not a former runner, one that I would normally play or look into, but it's one that has really shown a lot of potential, right? And so as I mention all the time, and as I always want to keep in mind, when you're focusing on the right stocks, the process really takes over from there, right? And so it's one of those things to where you have to believe in the patterns long enough. Otherwise, you're going to either miss out on the trades or trading at the wrong time. And I'll raise my hand first and foremost to let you guys know like that I normally make those types of mistakes. But I err on the smaller side. But just locking in what I did today, be it $216, $46, $764, and 28 bucks totaled out to $1,000 day. And these trades were very simple patterns that could be read very easily, and it's one of those things just following the patterns themselves. So, all right, squad. So yeah, this is one of the main reasons that I got away from E-Trade, just because their systems lag, and for what you're saving in commissions, you're gaining in frustration. But neither here nor there. So it is a former runner of recent. Within the year's history, no. And so as normal as I always talk about, you're typically not going to see me play the initial move to the upside, because if there's a lack of history, being volume and volatility with multiple days running, I'm not confident in these types of trades. Can I? Absolutely, yes. One day spikers, I have potentially traded those, and I have traded those before, but the setup is just not as predictable, and nor is my confidence the same within those types of trades. And so even with this, you see multiple days up, but what's missing? The volume, right? And so when you're looking at it right here, it's coming from the 130s, and the fact that the 130s was able to push it all the way up to 4, that's the volatility and the volume we need. And so now you can identify support and resistance. So as this thing continually runs up, and this is a daily chart, I don't focus normally until the downside, and that's where me as a short bias trader, usually I want to put my focus and my aim. But I also love trading effectively the first green day bounce, and that's exactly what I did to get the ball rolling. And so when I looked at this stock initially, I saw the run up, and what I always say is that you want the stock to prove itself. And so when it goes up right here, there's volume in it, and it's holding. And anytime a stock can hold near its highs, there's potential that it can continually go. But as I mentioned, this stock had no prior history within the last year. I don't care what it did 2 years ago, 5 years ago, 10 years ago. We want to look within some sort of relevant time frame, usually 180 days or 6 months to a year. And that's what we got. And so I see that it's consolidating. Again, I don't play any of this. It continually runs up. You have early shorts that get into this, and they end up getting squeezed up, and it runs up even more, right? Well, guess what? It continually consolidates and pushes higher. But then when I see it on the second day, exhausting itself, usually within the second to third, fourth day, definitely you start to see that downside. And so when I saw the downside, I actually tried to short this once or twice, and I ended up getting a pretty solid move into the open, but I didn't have the conviction just because of how well it was holding up. But I noticed that the resistance that was holding there was, excuse me, I didn't short this day, but I noticed that the first red day that happened, that it ended up failing fairly nicely. And so it now is down to SSR. And so when it gets down to SSR, you see, it's holding up the 317 level to 317. These are the resistive levels right here. And so resistance becomes support. Support becomes resistance. Resistance meaning that the stock can't go any higher. Support means that the stock potentially doesn't go any lower. It's being held up by other buyers, traders, whether it's long term, short term, what have you. It's just support or resistance, right? But it's important to know and understand these levels because typically they're going to happen around whole and half numbers. And so the fact that it's at the 330 level, or that it tops out at 4, you think about it in the psychological sense. Pick a number between 1 and 10, 5, 10, 15, 20, 25, 30. Let me borrow $1. Let me borrow $5. Let me borrow $10. Psychologically, in human nature, we're always going to gravitate to whole and half numbers. So that's where you really want to chart. The other thing that you want to make sure that you're doing is effectively bring your charting up to 10 to 15 to 30 minutes. That way, when you're looking at candles, you can clearly see that a candle is holding for 15 minutes, it's holding for 30 minutes. So you have that conviction of understanding that, hey, even though it's chopping around within the minute or 5 minute chart, it hasn't broken over 350 yet. It hasn't broken down under $1.50 yet. And that's where the conviction lies. But you want to try to buy or short as close as you can or possible to these levels. So as I take the short on this, I actually notice that it holds itself up, and it is SSR on the day, and it does. It's not SSR yet, but it ends up failing. And so when it fails, I actually try to short this on this first red day, potentially here, because this is the continuation of the run. And I noticed of where I shorted, I got it at the right resistive level, which was at the 323.30 mark. But it was early in the pre-market, around 5 o'clock, 4 o'clock, and I'm usually up, trading somewhat at that time. I have a premium broker, Cobra, which I use. And so they're effectively executing my trades on the short side and long side. But I noticed that level, so I ended up covering a little bit early. But it ends up, going down and tanking, and it gets to the 260s, and it triggers SSR. And I don't want to get too far into the weeds. If you want to know what SSR is, you can Google it. But basically, it's the lack of selling pressure. It's been around now since about 2010-ish, I believe. But basically what it is that once a stock goes 10% below the previous close, for simple numbers, if it's at $1 and it closes at $1, and the next day it goes down to 90 cents, it triggers SSR. So that allows the selling pressure to be relieved, meaning that you can't slam on the bid as a short seller. You can't short this stock and just hit the sell, sell, sell button and just continually push it down further, because ultimately you can push it down, or theoretically you can push it down to zero if there's enough pressure and enough volume and enough sellers that are involved in it. So it really tries to keep a lot of these stocks up. And honestly, since COVID, with all the volume coming in, there have been more cashless companies and just pathetic companies that have been holding up for quite some time, merely off the fact of SSR. So it's not a coincidence that this is now holding up once that's triggered. I don't remember the previous close of the day, but I just took mental note of that. And so once this holds, I start to pay attention to it. And again, you got to remember, it never ran within the last year, but it's holding these levels. So now it's proven itself to run. It's SSR. There's some sort of confluence there, or multiple things that are setting up that can give me conviction to take this trade now to the long side. But keep in mind that the resistance is still around that 330, 320 level. So as I see it yesterday, it starts to hold up. And what I really liked is that it started to pop its head over the 3 level. And so when it really started, I really started to pay attention at that point, to where when it started to bubble right here, right around 10:20. Ideally, you want to be trading between 9:45 and 11:15. You want to give yourself about 15 minutes of the market open, because it's super, super volatile, especially for newer traders. That can be intimidating. But then also, you just want to have some sort of clear direction, because usually stocks are going to retrace or wherever they're coming from 15 minutes into the market open. Again, not an exact science, but that theory is pretty relevant. And so I see this trade. I'm on a webinar. I'm actually teaching a class, and I see these levels and I see it holding up. And so I'm able to internalize very quickly the information that I'm receiving because of all of the work and effort that I put in. As a professional trader, I definitely pride myself on being able to decipher what's what. And I'm not always 100% accurate, of course. I'm right around this year a 60%, 65% trader. But you think about that, 6 out of 10 times, I'm normally heading in the right direction with the stock, whether it be long or short. So if you're talking about what's going on right now, it's SSR, it's holding back over the whole number, which is always a key mental level of support being 3. And now it has some sort of range. Again, that selling pressure is hard to deal with. Now shorts are in it, they understand this as well. So they see what I see. So you have to think about the long-term game as well as being able to effectively see the other side of the trade. Me being a short bias trader as well, I know what a short is thinking. What I always recommend, learn how to go long on a stock. That way it'll help you go short on a stock. Do not do it the other way because there are painful, painful lessons of being a short seller first and not understanding what the longs are seeing. So as it goes up, I end up taking a position around 304. I get the move and it pushes higher and it ends up coincidentally not sells at the 330 level. So I was dead on 100% accurate with the move, right? And I sell into all of that. Moving forward, I noticed going into the afternoon, I'm not selling between the lunch hours. I'm not buying in between the lunch hours, thankfully, this time, because normally I find myself doing that from time to time, as I mentioned earlier within the video lesson. But midday trading, when you're talking about lunch hours, people distracted, they're doing other things besides focusing in on trading. And I don't care how many algorithms or automations are in trading, there's still an immense amount of human element within that. So you need that volume. So look how dead this period is at the bottom of my screen, right? So thinking about all that, I just noticed that it's holding these levels. And anytime a stock, as a runner, which we've already seen that it can do, holds levels or holds near the highs, roughly between 15 to 26, depending on the characteristics of the stock and how volatile it is, it has potential of continually moving forward. So what do? I take the trade again. And that's what I love about multi-day runners. You can take multiple trades on these types of stocks and have the conviction of playing them to the right side of the trade. A green day, SSR, holding near the highs. We take that trade again around 316 and we take it all the way up this time to the 340s. Why? Because the support is much higher towards the resistance. So now it's easier for this to break through. If it tried to run all the way from here up to here, likely was going to fail. But now that it's holding higher, there's more buyers, there's more pressure on the sellers, and more importantly, those shorts are feeling that pressure and they want to cover as well. So as they're covering or buying the stock back, it's pushing the momentum up along with other momentum buyers. I want to be in the consolidation. I don't want to chase up here because it can always potentially fail. So we sell up into the 350s. Again, a nice round whole number. I don't like sitting on the whole numbers, 345-ish, 346-ish. And then we get more consolidation into the after hours. I should have bought this here because now resistance becomes support. So it's not a coincidence that this fails or falls back a little bit at 6 o'clock on what? All of this once previous resistance that is now support. So now it's holding. You can't see this with E-Trade, but I end up taking this trade in the 370s early this morning, which locked in at $200 right here. And so when you look at these executions right here, which are to the far left, I bought it right through here from all this consolidation over here. And then I sold it through the 4 level. Again, another whole number. So it's just rinse and repeat, guys. Rinse and repeat. And again, it's not an exact science. It wasn't a live trade, but it was a very obvious trade. And when you're trading for how long I have been doing it, you recognize these patterns. And it's no different than any skill set. You start to internalize all of this information, right? And so it ends up gapping up and taking out the 4 level and getting to 5. But again, you have to remember, now we're on the second green day, which could potentially fail. And with this short amount of time, this stock has went all the way from the 130s near the 5 level. And then look at the history. The history tells you a lot. If you want to know what a stock is going to do to the right, look at the history to the left. So if it's a one-day spiker, more than likely, it's going to one-day spike. It's not going to be a continuance. But we saw it already go 1-2 days, 1-2. So it's likely going to fade off. What ends up happening at the end of day today? Bounce, fail, couldn't break near the highs. It falls off. I end up shorting this stock around here. I end up locking in another $46 or $50. And, you know, simple as that. Again, it's not an exact science, but these patterns are predictable so long as you're putting the work in. Moving on to SOUN. Really proud of this one because it's been frustrating, you know, dealing with this stock. Again, if you want to see what I did on this bounce trade, I talked through it, ended up locking some gains in. I was actually down on the trade initially, but I was glad that I could get both on live to see the loss as well as the gains or the recoupment of the gains. But this stock has been a runner. It's associated with NVIDIA, which NVIDIA is its own market right now. It's pretty crazy how far NVIDIA has come within the last year and a half. A lot of option traders have been banking on this like ridiculously. But association because they have some sort of small share placement or market cap space within SOUN, SoundHound, but this is a very, very trash company. They had poor earnings, which actually added fuel to the fire, which I'll get to momentarily. But this thing consolidates, gaps up off the news, breaks over 4, which it was trying to do for quite some time. Again, this daily consolidation. And then, you know, it runs up, but typically it ran up into earnings and then it failed. And so I actually held through earnings on a short and ended up banking about $1,800. But something I don't recommend, but there was a lot of conviction and a lot of process within that trade. But we got the downside. But then when people get traders get over comfortable, it's too comfortable, meaning shorts. You know, it can get put gaslight on the gas on the flame, and you know it starts to bounce up, which you expect. Again, this first green day bounce, similar to GOEV or any pattern that we trade off of multiple down red days. But then I start to short in here along with other shorts, and like these locates and the fees to short were very, very cheap. So you got to think about millions and millions of shares being traded on this 100 million plus market cap stock. Usually they move a lot slower anyway. So the fact that this one is this volatile is really indicating of how much volume is in it and what's being done to it as far as manipulation goes. And so it ends up holding up. And what ends up happening is that shorts start to cannibalize on themselves. So when somebody shorts the stock or puts the pressure to go down, somebody's looking to cover it. So if you get multiple people doing that, millions of shares and thousands of traders, it can go very wrong very quickly. And so I recognize that. I get out of it. I start to trade it, you know, scalp it along the way. But the 760 level, a very, very clear, resistive, supportive level eventually. And so you see here multiple times on the daily that this stock is just holding in the 770s and the 780s, and it wicks down, and finally has that break. Well, yesterday, the conviction came to trade it today when I saw it breaking down. And when it broke down, I got the alert, but shame on me because I ended up chasing this stock down, unfortunately, and I got my ass handed to me off this trade, and actually took away some of my gains from my GOEV trade yesterday, and I was pretty frustrated on it, but I cut it. But I want to explain what volume exhaustion looks like. And so when this trade was failing, I didn't chase it down here into these wicks. Let's bring it down to the 5-minute. I didn't chase it down. I waited for the bounce over 760 because normally these stocks are going to retrace, but it hits within a 5-minute candle 5.4 million shares, and it just rushes back to the upside. And it actually took out some of my other execution orders that I had, and I ended up being roughly 250 down in all in a matter of seconds. And just shows you how crazy the volatility is, right? But there's massive, massive resistance overhead. But what it was letting me know is that this thing is trying to trigger SSR to suck in whatever it can to get some more shares out with insiders or the manipulation or what have you. And again, this is something that comes with experience, comes with time. I've seen this multiple times, and I can recognize it very easily. But now being SSR, it would be something difficult of this pressure to come in. So psychologically, as a short, you're thinking, okay, this is not going to be one of the days that I really want to go heavy in on it. That's the idea or the perception that they're trying to give you. So I end up relinquishing my position. I get out of it, understanding it. I was going to get back in the next day. I end up getting short around 8:13 in the morning, knowing that longs are going to realize like, oh crap, this thing hadn't pressed back up like it usually does. Because look, it bounces, it fails, it pushes. It bounces, it fails, it pushes. It bounces, it fails, it pushes. And it did that for like 2 weeks. But again, now that all of this pressure, it's like a bouncing ball. It can only do this so many times to where now you just have to control and manage risk. Well, I was able to do that. I ended up, as I said, shorting it. I got out initially at the open knowing that it was going to go red to green. Why? Because I've seen it multiple times. So I covered my position. I end up locking in roughly about $200 or so, 250, I believe. And then I get out of it and I saw exactly what I thought I was going to see, the push back to the upside. And so what do we get today? We got that push all within this 5-minute candle to the upside. But then, as I always talk about, I love 5-minute agreements. And when it's time to short or go long, I love seeing this, the conviction of it, right? I knew just based off the price action, 850 was going to be a hard level of resistance just because of it actually tapped through 247. And going back to it, I want to show you guys something. Think about this, what I talked about SSR, right? So within this candle right here, this one candle took it down to SSR, which was 747, I believe. It hit 748, 749. It takes it right to the low of 747. And you can look it up yourself. And so, not a coincidence. It brings it back to SSR. Now you're dealing with it up here. But again, it has this all in one candle, this extension, this volume, because even when it was trying to push here, it just kept failing, couldn't push any higher. This is the most volatile time of day. Again, it can be scary shorting, but I understood what I was doing. I got back short again. I got an average position of about 830, and then I just held on. I just held it and just watched it peter out. And yes, we get back down to these levels, and now it's slowly moving with plenty of time in the day. It's doing this around the 2 o'clock hour. So again, having a roughly 3 hours left in the day, it's going to be hard to hold this up considering how many times it's bounced. But you get that consolidation or sideways price action on a red day, breaking to the downside. Now, the only thing is you couldn't short this here. You had to already have gotten in it, because if you chase it down, again, you can't hit the bid. You have to be able to allow the bid to come to you because it's already SSR, unfortunately. So that's the theory behind it. But the pressure was there. The selling pressure was there with the time. I ended up getting out of this thing thinking I could get down to the sevens because that was the next SSR trigger. So I was had my position here, almost bottom ticked it on this wick here, but it bounced. I covered it in the 730s. I locked in additional, which was right around $700. And then you get the fade off here, right? And the bouncing and the bouncing. And then it continually goes down to the 640s after hours. And so this is where that live trade comes in off of the 630s. I'll show you really quick what I saw or what I was looking at. The 630s, if you put your, from this candle where it was bottoming out, I remember this, where the breakout was and where the gap is. And so again, this comes with time, guys, and experience of doing this over and over again. I saw the 630 level. It's not an exact science, but again, I'm focusing in on those whole numbers and half numbers all the time. And yeah, I was able to effectively trade today. So really proud, keeping momentum going for the month of March and just focusing in on the process. But hopefully I explained everything okay. If you guys have any questions, want to leave comments, please leave feedback. Tell others because I always want to be able to give valuable, credible information. But looking forward to continually doing this and getting back into the swing of things. I've gotten some other business matters and family matters settled down. And so I want to get back more consistent with all of this. But hopefully I explained everything okay, guys. Again, let's just keep learning, keep applying, and most importantly, let's keep going. E Hobbs, aka Art of War. Talk to you guys soon. Peace.